Morning, Steve here in Chicago with the morning grain comments. Overnight, pretty light volume. We've got beans down, corn up, and wheat a little bit lower. The outside markets, we've got basically trying to figure out where things are going to go after the U.S. election. The U.S. dollar is at 14-year highs, with U.S. euros testing support below 105. And the Chinese yuan is trading at 8-year low. The Brazilian real and the Russian ruble are also lower. Now, what's interesting about the Brazil real is that that's encouraging farmers down there to sell beans, and so they continue to be aggressive sellers. We also know that there's a lot of talk about the U.S. dollar could offer resistance to some of our markets. Overnight, the China Dalian futures closed lower for the week, and continues to be some concern about the government cracking down on speculative trading there. Malaysian palm oil futures also lost about 11 ringgits. The Indian palm oil is expected to slow down because of some ban on large notes and leaving a shortage of currencies to import. So all those issues continue to be, take a back seat maybe to normal conditions like weather and demand and things of that nature, but they still are important to where the dollar goes, where energy prices go, and eventually where all commodity, including grains, go. In the beans, I think that we're trying to test the mettle of the longs. We continue to hear China buying beans, but now we're looking at Brazil. Not being real aggressive because we really don't know what the crop conditions are going to be down there, but right now they're off to a good start. So the export demand for U.S. could start slowing. In the corn, you have a mixture of shorts in the market. Should they cover this time of year? Farmer selling is going to slow, but we have a lot of corn to eat through in the next 6 to 8 months. And in the wheat, there just seems like there's too much wheat for the market to rally despite the funds being net long. The 2-week forecast continues to see normal to above temps for Midwest. They put normal rains in for the Midwest, so that's kind of a change. And yesterday we got the 3-month outlook, which basically drew a line across the northern third of the country, which will be cold and wet. The southern third of the country will be warm and dry, and in the middle will be normal. So we'll take that normal middle and let the snows hit north of us and the dryness and the heat south of us. So all in all, a choppy trade, still range bound. I think beans are too high. I think that corn prices need to bounce a little bit to move grain into the pipeline, and we'll see what wheat does considering the dryness that we have across the southern plains. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.